What is good, YouTube? Channel FX back. Hey man, listen. CPI was just a couple of days ago, and I know for a fact that some of you couldn't profit from it because you're still struggling in finding an edge in the market. But I got your back. Just do yourself a favor by watching this video to the end. If you haven't yet hit that subscribe button, make sure to hit that subscribe button. Make sure to hit that like button. Make sure to drop a comment down below. Alright? If you're also interested in enrolling in my one-on-one mentorship, just DM me on Instagram. The link is in the description below. So with that being said, let's just get to business. Alright, so taking a look at AUD/USD, we're on the 4H time frame. Alright, so what do we need to do first? We first need to identify our trend. Like I've always said in all my videos, the first thing we need to do is to identify our trend. Remember, the trend is always your friend. So the first thing you want to do is to identify your trend. And how do you identify your trend? By identifying what our market structures. Alright? What did I say? We need to identify what our market structures. So now let's go back in time and let's all identify our market structures together. So what do we have here? We have this lower high, which went on to create what? This lower low. So after this lower low was created, what the price do next? It went back up to create what? A new higher high. Why is this a higher high? Why is this considered a higher high? Because this high is higher than that of its previous high. Or because price managed to close above what its previous high. You get me? That's why this high is considered as our new higher high. After this higher high was created, what does price do next? It goes back down to create what? A new lower low. Why is this a lower low? Because this low is lower than that of what its previous low. Right? After price managed to create this lower low, what does it do next? It goes back up to create a new higher high. After this higher high was created, what does price do next? It comes back down to create a new higher low. Alright? After this higher low was created, what does price do next? It goes back up, but it never creates a new higher high. Why? Because price failed to close above its previous higher high. You get me? So going to next week, what I want to see price do is to go back up and close above this high. After it closes above this high, what am I expecting again from price? To come back down to create a new higher low. Then continue back up. So on and so forth. You get what I mean? Good. But in this video, what I'm about to show you is how I was able to capitalize on this move right here. You get me? So from the structures we've identified, our uptrend is confirmed. Alright? Our structures have confirmed that price is in an uptrend. So after we've identified our market structures, what do we do next? We then move to the H1 time frame, or we then move to a lower time frame to look for our entries. So now let's go down to the H1 time frame to look for our entries. Alright, so coming down to the H1 time frame, right? What do we need to do first? Same thing we did on the H4 time frame. We also identify our market structures on the H1 time frame. You get me? Since the H4 time frame was bullish, all what we need to see on the H1 time frame is bullish structures. I'm talking about a higher high and a higher low, not a lower high and a lower low. I want to see price create a higher high and a higher low. You get me? So if you are to go back in time, let's identify our H1 market structure. So starting from here, what do we see? We see price form what? A lower low, a lower high, a lower low, a lower high, a lower low. You get me? So what we are expecting from price is to break above this last lower high to confirm a shift in structure on the H1 time frame. You get me? I repeat, since this is the last lower high price created on the H1 time frame, we need price to break above it to confirm what a shift in structure from a bearish structure to a bullish structure. You get me? Good. So after I seen this last lower high, all what I did was to wait for price to break above it. But before price broke above it, let's try to identify what price did over here before it broke above it. If you are to look very closely, before price broke above our lower high, what did we see? We saw price creating a series of higher lows right here. You get me? I repeat, before price broke above our last lower high, what did we see? We see price creating a series of higher lows. Alright? So this was the last higher low that caused the break of structure, or that caused the change in structure. Why change in structure? Because this was the last higher low that caused the break of this last lower high. You get me? So till price manages to come back to close below our higher low, we are still bullish. Do you get me? So after price managed to close above our last lower high, what did I wait for? All what I waited for was for price to come back to retest this previous lower high, or to retest this resistance as a support. You get me? That's what I waited for price to do. I waited for price to break above our lower high, then come back to retest this resistance as a support. Alright, so after price retested, what was I looking for? All I was looking for was what? A confirmation candle. Also, if I'm to take my Fibonacci and draw from this higher low to this new higher high, where does price come back to retest? Our golden zone. Our resistance zone falls within what? Our Fibonacci golden zone, which is our 50% and our 61.8% Fibonacci level. I call it the golden zone. So after price comes back to retest our golden zone, what next do I wait for? I wait for a candlestick confirmation. Alright? What did I say I wait for? I wait for a candlestick confirmation. And looking at this candlestick formation right here, what do we see? We see a morning star candlestick confirmation. We see this bearish candle, this doji, and this bullish candle. So after I seen this candlestick confirmation, that's when I entered my trade, right? Placed my stop loss at this blue line, which is our Fibonacci 78.60% level. You get me? Risking 24 pips to make 100 pips, giving us a risk to reward ratio of 1:4.35. As simple as that. So when the CPI data was released, that caused the spikes in the market. You get me? No drawdowns, straight to take profit. You get me? As simple as that. As simple as that. So now let's go over our confluences. What was our confluences that led us in taking this trade? First confluence was a change in structure from bearish structure to bullish structure. Second confluence was a retest of a resistance as a support. Third confluence was our Fibonacci level, which is our 50 and our 61.8% Fibonacci level. Fourth confluence was a what? Was a candlestick confirmation. You get what I mean? Yeah, fourth confluence was a candlestick confirmation. So we have 4 confluences that built our confidence in taking this trade. You get what I'm saying? Yeah, as simple as that. As simple as that. In case you didn't understand anything I did, make sure to rewatch the video over and over and over again to understand what I did, alright? And like I said earlier on, if you're interested in catching moves like this, just DM me on Instagram to get yourself enrolled in my one-on-one mentorship, alright? If you also haven't yet subscribed to this channel, make sure to hit that subscribe button. Make sure to drop a comment down below and make sure to like this video. Alright, drop a comment down below rating this video from a 1 to 10. So with that being said, I'll see you in the next video. Ciao and FX. Peace. I'm out.